One winning sector in 2008 as it was in 2007, infrastructure. Welcome to Wall Street Confidential. I'm Farnoosh Torabi. Investors may not be taking heart to the sector as they should be, though, right, Jim?
Well, infrastructure is by nature lumpy, and if you look at what Ray Milkovich, the CEO of Foster Wheeler, has said over and over again, which is that his stock is just is a function of whatever what it really should be a function of is the secular growth in infra. Instead, it's a function of contract to contract or quarter to quarter. It's very difficult for people to ever look at a different metric than quarter to quarter. But infrastructure is completely driven by contract. Witness today, FMC Technologies, the stock had a horrible quarter according to what the street felt. And the stock dropped about 12%, where I said, look, I think you should buy it. And roundly criticized in various sites for saying that because it's down. And you're never supposed to buy anything that's down. I mean, that's the lesson of really bad investing is never buy anything that's down, only buy things that are up. But FMC is levered to contracts, not to the quarter. And they got a $900 million contract from Total. Now the stock is above where it reported. Core Labs and Oceaneering International are very similar, so I'm recommending those. Foster Wheeler, 52-week high, about to split. Every time it wins a new contract, and there's about $1 trillion worth of contracts out there to win, Shaw Group too, the stock goes up, and then it retreats. And what I'm saying is rather than sell into the retreat, which again is just bad investing, you buy the retreat because the stocks do not trade on earnings per quarter. They trade on contracts. The notion of buying a retreat is something that I'm going to emphasize in 2008. 2008 is going to be a very hard year. Why? Because we have inflation. We have a Fed that, frankly, is just your enemy. And and I always hear that, well, hold it, the Fed's going to surprise you to the upside. It's inconceivable. We had an industrial production number today that showed me that the Fed feels that it's very right. So where are you going to make your money in 2008? You're going to make it in what I regard the hardest place possible, which is buying a dip of a fundamentally good company that's being sold for the wrong reason, going against the momentary conventional wisdom. And that's what FMC Technologies was. That's what Foster Wheeler is. This is not something that anyone who's come into the market in the last 3 or 4 years wants to hear. I'm also recommending the same thing on Hewlett Packard. I recommend the same thing on Corning, on EMC. All people really want are stocks that go up in a straight line. They want Apple, they want Research in Motion, which, by the way, had a dip, and that was a great time to buy it. So did Amazon. What I am saying is that the quality companies whose stocks get hammered are very intriguing if the metric for what they're getting hammered for is a buy. Now, metric is, in other words, contracts, FMC, buy. What will confound people here is this is not a method that is buy and hold. It's also not a method of consistency. What it is a method of picking spots. It's grind out. I would consider it running game versus passing game. This is a running game year. That's why I am cautious, and that's why I am demanding of people to look at their models of how they're making money, because it's a running game year, not a wide receiver year.
FMC going into Angola. Are you concerned about the volatility in Africa at all?
Look, it's a Total contract. Yeah. Total is a French Foreign Legion company. They work where no one else does.
All right. Thanks a lot, Jim Cramer, on how to play infrastructure in 2008. Pick the spots. This is TheStreet.com TV. Stay tuned.